What is the difference from me never going to a property 40 minutes away and me never going to a property on a 3-hour plane ride?
My basic hypothesis about the housing market is that affordability is not really coming back anytime soon.
You got to get the fundamentals down before you can start playing in that game, and that can't be your whole portfolio.
Just sort of coincidentally at the same time, got a second job cold calling for a commercial real estate broker.
We were not buying real estate. We started in 2018, but the thought was, don't touch real estate. That's crazy. It sucks.
Investing in real estate back then and now requires you to look a little bit further than just what's immediately in front of your face.
Can you give us an example of how data has helped you avoid a bad investment or capitalize on a good investment?
Home sales volume is down 50% over the last 2 years across the whole country. Like, that's important.
Dave, officially welcome to the show. Corey and I are so excited to have you here, man. We talked a little pre-recording. Longtime listeners of BiggerPockets, big fans of yours, and I have a couple of your books. So I'm just,
thank you.
Yeah, man, absolutely. So we're excited to unpack your story here and kind of give a little bit of a peek behind the curtain about who you are and your investing strategy. I think a lot of people hear your voice on the show and on BiggerPockets, and maybe they're kind of curious about how you started in the game. And so we'll pave that path today, but just wanted to give you, first off, a thank you and a welcome to the show.
Thank you, guys. I'm super excited to be here. I appreciate it.
Absolutely, man. You're welcome. So let's start off here. Maybe if you could give us, a walk down memory lane, how you even got into real estate investing. I think it's so interesting to learn people's stories before they got the real estate bug. So take us as far back as you'll want to go, and then we'll kind of walk through your journey.
I graduated college in 2009, which was a rough year for the job market, and moved out to Denver from New York, where I'm from, and was waiting tables, just had no idea what I wanted to do. And I moved to Colorado because I love skiing, and I would go skiing with this dude who is a good friend, but not my smartest friend, to be honest. And he bought a rental property, and he was just killing it. And every time we would go skiing, we'd be riding up, he'd be telling me about it. I was like, man, if this dude could do it, I could do it. And so I talked to my roommate about it and started looking into it. Just sort of coincidentally at the same time, got a second job cold calling for a commercial real estate broker. And so it was just kind of like surrounded by real estate, not super intentionally, but had done some econ classes in college and like knew the basics of financial modeling and just ran the numbers on regular deals, things that you could find super easily in Denver at the time. And it just kind of made sense. Everything made sense. And so I wound up figuring out a way to get a deal. I had no money, $0 to put into it, but was able to get 3 partners. And I contributed sweat equity. I managed the property. I found the property and was originally intending to house hack. Didn't wind up doing that because we were able to just get better rent from not doing it. But that was back in 2010. And I've been doing real estate ever since.
Love it, man. Dave, I want to talk to you about the sentiment about getting into real estate in 2010. If you listen to real estate podcasts, you listen to us, BP, everyone's talking about real estate in 2025, right? And some people think it's too late, right? Which is ridiculous. But that's the feeling, right? In 2010, we were not buying real estate. We started in 2018. But the thought was, don't touch real estate. That's crazy. It sucks. It just crashed. Was that the feeling when you got in, or did you just know that? Because you're known as the data deli now. So we're going to get into data stuff. Like, did you know based on the data that it was a good move? I'm curious.
At that point in my life, I was a poli-sci major in college. I did some econ classes, like I said, but I wasn't really analytical to the point where I understood the macroeconomics of like where things were going. I could just say to myself, I was going to make each of my partners $200 a month in cash flow. And it was a good cash on cash return. And that felt good enough for me. I was waiting tables. I was looking for the money to spend. I wanted to pay my rent. I wanted to go have fun on the weekends. And so this just made sense to me in that regard. But no one was buying real estate. It was just one of these things where I knew enough to know that markets move cyclically, and I could say it's going to go back up. Like, I felt pretty confident about that. But the Denver market didn't bottom till 2012 or 2013. So you had to still have a lot of confidence in the market that it was going to come back, and watching your property value stagnate or even decline a little bit is a little scary. And I think that's really relevant to today. Not that I necessarily think the market's going to decline in the next few years, but investing in real estate back then and now requires you to look a little bit further than just what's immediately in front of your face and say, 6 months from now, no one knows what's going to happen. But I feel pretty good about what's going to happen 5 years from now. And I felt sort of the same back with that.
Totally. So what does your portfolio look like now? Maybe take us through a little bit of you got the first property, you got a few more, I know. And so like, what does your portfolio look like now? And then, how have you continued to buy since that first deal?
I would describe my overall investing philosophy in sort of thirds right now. 1/3 is actively owned real estate. So rental properties that I have still in Colorado and some in the Midwest. 1/3 is passive investments in real estate. So I've participated a lot in syndications. I wound up, later in 5 years ago, moving to Europe. So I lived there for 5 years. I'm back in the States now. So I did a lot of passive investing for those 5 years. And then I invest in the stock market too. So I have about 1/3 of my net worth in the stock market as well. Pretty much all in index funds. I don't pick stocks other than what one of my friends tells me because I trust him, but that's about it. So that's where it's gone. All the actives are either small or single families or small multifamily. I have one short-term rental that's just kind of more for fun and personal use. And I like that balance. My hope is to kind of keep that balance roughly in thirds because I work full time. So I'm not someone who wants to build this massive operation where it's going to be, I'm on properties, looking at properties, dealing with tenants, any of that. I really sort of favor the more passive side of things.
Cool. So for people that don't know you, I don't know if this is the official title. This is the one I'm seeing, head of real estate investing at BiggerPockets. That sounds like a title they don't just give to everyone. If you got to be the head of real estate investing. So, but you're known as the data deli on Instagram, and your biggest thing is data. And that's like one of the things I really wanted to cover on this podcast, because I think one of the things that people get wrong about real estate investing is they talk about the market as if it's this linear, binary, single thing, and the market is down and the market is up. When in reality, we all know this. We have property in the Philadelphia area, in New Hampshire, in Vermont, in Arizona, in Tampa, and they're all different. Like all the markets there are different. And I think that if people can break up the thought of like the market versus the submarkets and what individual cities are doing, I think they're going to have a lot more success in real estate investing. I'm sure you have some things to say about this, but I'm very curious about like maybe some trends you're seeing or what you're noticing. And because I always feel like everyone's like, oh, everything's up in the air. And like, to me, when is it not up in the air? It's just always like that. So what are you looking at in 2025 to decide maybe where a good place to invest is, or just the idea of markets and submarkets in general?
Absolutely. Completely agree that this idea that there's a national housing market is sort of a myth, and I perpetuate that myth, so I apologize because I talk about the market all the time because there are important national level trends. It does matter for our industry that, for example, home sales volume is down 50% over the last 2 years across the whole country. Like, that's important. Home sales volume is down in almost every market. So these trends do matter. But traditionally, if you look back over the last 70 or so years where we have good data, for different markets behave differently. And this was true up until, 2018, 2019, where some markets were great for cash flow. Other markets were great for appreciation. Some were what I would call hybrid markets that have a little bit of both. And then 2020 happened and everything just went up. And I think it created this false sense of just false expectations, I guess, where you're like, oh, every market appreciates, every market has, this ability to grow like crazy. And that's just not true. And I think as we come back to 2025, we're probably going to get back to the historical norm, which is that certain markets appreciate, but most actually don't. And when I say don't, you'll still see the prices go up. But what I really think about is, how do home prices compare to the pace of inflation? That's, I know it's a little bit nerdy, but that's kind of really what matters, is how are they exceeding my own spending power. And for the answers that most markets historically, the national market included, just keep pace with inflation. And that's good. That's a reason in my mind to invest in real estate all by itself. But if you're trying to identify places that are really growing, you got to dig a little bit deeper to find the markets. Denver is an example. I started there in 2010, but obviously Austin or Phoenix or some of these markets that really outpace national averages. I think we're going to go back to that, where it's going to be a handful of markets that are really, really strong, and the other ones are going to chug along and be fine. You could still invest in those. Like, honestly, I like investing in those kind of markets because there's less competition. But I think that there's that's sort of where we're heading with this splitting of the market back to what it normally is.
Very cool. So can you give us an example of how data has helped you avoid a bad investment or capitalize on a good investment? I think maybe giving a real life example might help aspiring investors take things down.
Yeah, let me think about that. So, especially when I do passive investing, I think that market analysis and data analysis is super important. And so I am fortunate I get to see a lot of syndication deals that I'm looking at, and investing from Europe. I was basically like, I can invest in any market in the US now because everything's long distance. There's no option for local investing. And so I spent a lot of time just trying to figure out what markets are right for me and my strategy. And this will be different for everyone. You can really use data to sort of figure out whatever strategy is right for you. But for me, I look for hybrid markets. Like, I like things that are going to appreciate, but at least break even cash flow. I'm not someone who's going to float long-term rental properties. And so I've been able to really dig in on every syndication and really go based on obviously the operator, but trying to find places where there is a supply and demand imbalance. I think that is really a huge, huge component. People really look a lot at demand. Where are people moving? Where are households growing? Where are their jobs? That's all important. But the story of the last couple of years has been that there's too much supply in a lot of markets. And so to answer your first question, Ryan, about where I avoided one, I, like everyone, was like, oh my God, Austin, I got to go down there. And I was actually even more interested in San Antonio, which is, for those who don't know, about an hour, 90 minutes south of Austin, but a lot more affordable. Surprisingly, the 8th biggest city in the country. I had no idea until I started digging into it. It's huge. And there were people moving there in droves. But if you went, you just saw all of this excess supply that people got too excited about it. And this was back in 2021 or 2022. And I decided not to buy there or to participate in syndications. I was actually looking at buying a couple of duplexes there. And I chose to avoid that because I was able to see that although those markets have great fundamentals for the long term, the next few years were going to be pretty rough. And that's basically what happened. On the other hand, I invested in a syndication, random place. No one was investing in near Virginia Beach, Virginia. Now it's doing really well. People were moving there, not as much as Austin. So you kind of have to look a level down, but no one was building there. And so you could just see pretty simply that demand was outpacing supply. It's kind of Econ 101. That's going to lead prices to go up. And so if it only were that simple, if it was only really easy to say like demand is X and supply is Y, everyone would be good at this. But you sort of have to go a level deeper. But that's just sort of how I try to not overcomplicate it. I don't really think about like some of these these huge trends and AI and all these things that people are trying to figure out. Like, I'm just kind of like, where are there areas where more people want houses than there are houses available? That's where I want to buy.
Yeah, Dave, I want to concentrate a little bit on long distance investing here. And the reason why I bring this up is Ryan and I noticed a trend in our investing journey. When we started, we thought we got to invest in our backyard. We have to do things close by. I got to get touch and feel. And then what we realized is that our properties were 30 to 40 minutes away and we were never going there. And I was thinking to myself, wait a second. So I live in Philadelphia. I'm buying in New Jersey. I'm never going to these properties. what is the difference from me never going to a property 40 minutes away and me never going to a property on a 3-hour plane ride? And you
Nothing.
are a huge, clearly a big proponent of this because you lived in a different country across the sea. So I'm curious about your strategy and like, when did you discover that was the right move? And now you live in Seattle, you have property in Colorado, you're investing in Virginia Beach. The world is like this even playing field where you can do it from anywhere. So I'm curious about your thoughts on that.
Yeah, I wish I had discovered it earlier because for the first 10 years of my investing career, I was just doing stuff in Denver and self-managing everything and was pretty scared to do anything else. And even though the market in Denver in 2018, it was still okay, but it was hard to find deals. And I think I would have done better if I had done something else. And so I moved to Europe. My wife was working for a tech company that got bought by Booking.com. So we got transferred to Amsterdam. And I was kind of like, man, I got to figure this out now. So one, I figured out how to build the systems in Denver. That was kind of step one, was hire a property manager. And I didn't hire a full service property manager. I had a friend who's just a good dude and reliable handyman. And so I still did like all the financial stuff. I mostly communicated with the tenants, and he just unlocked doors when I would set up showings. He would just go show up and he would take all the requests. But you learn a lot. And I was just like, this isn't that hard. And I'm still managing it. I don't know. All of my properties, maybe less than 10 hours a month. And I was like, okay, I could do this pretty much anywhere. It will be a little bit harder because Denver, I just know well enough. And I had built up a book of contractors that I trusted and knew over 10 years. But, that's trial and error. And you always have to replace contractors and subs. So it's like, you just got to keep doing that. So that sort of gave me the confidence to do it. But to be honest, in 2020 and 2021, I didn't even buy anything else directly. I was just doing syndications because it was a decent time to be buying those. And I was just super busy. So I waited a few years to start buying in these other places. But I think, I've learned how to do it. And I think you sort of need to scale up, where I recommend to people you buy something that's a little bit more turnkey in your first one that's out of market, and try and not do heavy renovations before you've built some trust in the market and start to know it. But I've been really encouraged by it. And I think that it's going to be more and more necessary. My basic hypothesis about the housing market is that affordability is not really coming back anytime soon. I know a lot of people are saying rates are going to come back down and there's going to be some crash, but I think the reality is more boring and it's going to be harder. And for a lot of investors who live on the coast or in these expensive markets, the reality is that if you want to buy cash flowing properties or you want to get into the market and don't have a ton of capital, out-of-state investing is going to be your best option. And so I've been sort of trying to encourage people to think more about it. And it is daunting, but I do think it's going to be important for people to do. And there's plenty of great markets. And as people like yourselves and BiggerPockets talk more and more about this, I'm hoping that people will get a little bit more comfortable with the idea.
Absolutely. I have one for you, and you've been mentioning syndications a lot throughout the episode. And so I just want to get your take on this. At what point do you think aspiring investors or current investors should dabble into the syndication space, and who are syndications the right fit for?
Yeah, I didn't do it until 10 years in, and I was kind of forced into it. But I wish I had done it earlier, because doing it in like 2017, 2018 was a good time to be a syndication investor. It's hard. I'll be honest, because the most syndications, the minimum investment's 50 grand. Actually, most of them are 100 grand. So you need to build up a lot of capital. The second thing is you need to have a lot of liquidity, because the big downside of syndications is that you're giving someone else your money, and then you have no control over that investment. And so if they decide to sell it in 3 years, cool. If they decide to sell it in 10 years, that's up to them. It's not up to you. And so you can't need that money. So you need to have enough capital built up from investing or your other job where you could say, hey, this is probably going to be 5 to 7 years. I'm not going to see, you'll hopefully get cash flow, but you're not going to see your principal back for a while. So I think that's it. And then the second thing is you need to have a good network, and you need to understand data at like a preliminary level, or at least a decent level, because that's it. Like I think of this a little bit as, I'm trying to think of the right analogy, but like you're sort of betting on a horse. Like you're not like the jockey in this scenario where you get to drive. You sort of have to do all your work up front and like understand what the operator is, who it is, and the market they're investing in. And then you have no control. So it's really about due diligence. And if you're just getting started, that can be really hard, especially in commercial real estate. That works a little bit different than the residential market. So I usually recommend people get into that a little bit later in their investing career, 5-10 years in, something like that.
Yeah. Okay. I want to talk a little bit more about trends and what you're seeing, and maybe talk to me about some markets that you're bullish on. I think what I've seen over the past, let's say 3 to 4 years, is that people are moving southeasterly across the United States for the most part, from California to Texas, New York to Florida. You're seeing North Carolina, South Carolina, Georgia, Alabama, Arkansas, Phoenix, kind of like. And you live in the northwesternmost point of the United States, right?
Yeah.
And obviously Seattle's a great market, but it's hard to get into now. So what are you seeing in terms of trends? I watched Austin go up 50%, then back down 15 or 20. And people are thinking like it's crashing. It's like, well, it's kind of regulating in a way. Like it was up 50%. So yeah, are you okay with it being up 30% in 5 years? Like I would. I'm curious about your thoughts on what you're seeing, and if you have any more to add there, just because knowing you're the data guy, I'm not.
Yeah. So I think there's a really interesting dynamic, and a big opportunity for people is that a lot of the markets that have the best fundamentals are seeing these biggest corrections right now. Austin's a perfect example. Great fundamentals, right? People love moving there. There's tons of tech jobs. Wages are going up, like a lot of good stuff that you want to see in a market. But they overbuilt, and that's going to take another year or two to probably correct. So I wouldn't just buy anything in Austin right now, just planning on it going up. But there's probably going to be good opportunities because it's tough to be a seller right now. And you could probably negotiate, and the pendulum will swing back in the other direction, and Austin will be doing well. You see that also in markets like Phoenix. Boise's already on the other side of that, right? It went up like 80, 70%. Then it had a correction, but now it's already growing again. And so I think that's one avenue for investors right now, is if you're really looking to drive appreciation, look at some of these markets that are seeing some struggles right now. And again, be careful. There's a lot of trash on the market for sure. But those are good opportunities. They're not going to be the best cash flow markets because, again, I think we're going back to this sort of normalized housing market where markets that are growing a lot aren't going to have the best cash flow. But, if you're looking to build equity, which I recommend to people early in their investing career, these can be really good options. I think the second thing, go ahead.
Yep, you're good.
No, so the other thing is what's happening in the Northeast and the Midwest is super interesting because there is less demand there right now than in the Southeast in the aggregate level, but there's just no housing supply. No one's building there. They're having the opposite situation. That's what's going on in Austin, where people are moving to Austin, but there's too many houses. There are places like, I don't know, even Detroit or Indianapolis, like people are moving to these markets, not as much. Indianapolis is a good example. That's a growing market in terms of population, but there's not the same level of huge, massive real estate development. And so prices are going crazy there. You guys probably see this in the Northeast, right? This is happening all across the Northeast. And so will that last forever? I don't think so, but I think it bodes well for the next couple of years for these markets. And, this is just pure speculation, but my long-term philosophy about real estate is that affordability is going to really drive people's behavior. Yes, people are moving to so go ahead.
No, I think this is an interesting time for real estate. Sorry to cut you off. I'm just like,
please.
You have me thinking like, I think what I've noticed, and just like talking about a younger generation, I don't know how old you are, but I imagine you're in your 30s or 40s, right?
37.
Like 37. Yeah. So we're around the same age. We're 33 and 34. What I've noticed here is there is this influx of crypto and AI that is allowing people to think that investing is as simple as pressing a button and having something 10x, and then you're going to be rich. And I think the fundamentals of real estate actually make it a lot easier for investors who are just getting in, who understand. I've never heard of a person saying, wow, I shouldn't have held on to that rental property for 20 years, right? Like,
right.
It doesn't happen. So I think if people think with the long term in mind, I just don't have, regardless of the fluctuation of Phoenix or Austin. I think if you're buying now and your plan is to hold, I do not think that there's an issue in 2040 of you owning a property there. And I think if people really think that, they can become a millionaire plus off 1, 2, 3, 4 properties, and they don't need to buy 50. So that to me has kind of eased my mind about real estate and what people think about it up front. If you want to go press a button and try to get rich and speculate, like, okay, fine, this isn't really for you. That's just not how it's going to work. So have you noticed that as you you do the BiggerPockets podcast, you hear about what people are thinking? Has that crossed your plate at all too?
I totally agree with you, Corey, and I might rant about this a little bit because it kind of frustrates me a little bit. But I think that this idea that you can 10x, or you see these people on social media being like, if you're not making millions in your first year, what are you even doing with your life? It's just so unrealistic. I'm not a crypto hater. I don't really understand it enough to know what's going to happen. But I just think anything that 10x's or 100x's, that's going to normalize. There is no cheating in investing over the long run. These things come back around at some point. How that happens, when it happens, someone smarter than me can tell you. But I just don't buy into that idea. And to me, I think it shows the really important difference between quote unquote investing and what real estate investing is, because real estate investing is really entrepreneurship. It's owning and operating a small business. And that's what I like about it, because it gives me at least a feeling of control. Whether we're really in control or not, who knows? There's all these other things going on. But, it allows me, at least especially with the active investments, to, if my business isn't doing well, to try and do something to change it. If I need to reposition my portfolio, I can do that. Whereas investing in crypto, you have no control over what's going on. You're just kind of along for the ride. And to me, that's not as appealing, especially if your goal is financial independence and not get rich quick, get me a Lamborghini in the next year kind of thing.
Yeah, I want to jump in here too. It's funny because I talk to a lot of people about this, and it's the younger generation that has been on TikTok or Instagram, and I don't know, it's Gen Y, but or Gen Z, I forget what it is, but it's a couple generations behind us, behind the millennials, and they're just it's always these group chats about crypto and the meme stocks and all these things. I'm like, dude, you got to get the fundamentals down before you can start playing in that game, and that can't be your whole portfolio. I have a younger brother who's really into that, and I get a bunch of funny texts from him, and he's just like, "This it's going to the moon, man!" And I love chatting with him about it. I'm like, dude, did you set up the Roth IRA that I talked about? Do you have a brokerage account? Are we good with the 401k? We good? And then I'm trying to get him a rental down there too. And so where he lives, it's just so funny. So we go through this. It's almost a coaching for him, and but it gets me excited too, because I do like having a sliver of my portfolio in it, right? Because if the world does change and this becomes a big part of it, it's okay, at least I was an early adopter. I think with 20% or less of the world is even invested in crypto. So just throwing that out there. But now that we're kind of on the number side of things and investing, and I know we talked a lot about the market. I know you co-wrote the book, Real Estate by the Numbers, with Jay Scott, and it breaks down a lot of the analytical side of investing. And I think when people get in, we talk to people on a daily basis, and one of the biggest daunting things for them is hey, listen, I love the idea of real estate. I understand the benefits and it's sexy to me. I like the small business, becoming an owner, but I really don't have the confidence to analyze a deal and know when to make an offer and to know that I'm not going to lose this big lump sum of cash that I saved. So I guess my question to you is how do you encourage investors who feel overwhelmed by the numbers to get comfortable with analysis based on your complete track record over the years?
Yeah, I think that is a common thing, and it's totally understandable for people to feel a little bit intimidated by it, because real estate is just a capital intensive business. You're going to have to put up a lot of your money, and that can be super daunting. There's two things I recommend people do. One, literally just go Google the median home price in the United States over time, and it just will give you confidence, because home prices in the US just go up. And yeah, they crashed in 2008. We were all around, sort of coming of age and becoming adults at that time. So a lot of millennials have some trauma around that. But even the housing market came back and then some. It's one of these things that will give you some confidence. But the other thing is, I recommend reading the book, or we have some resources on BiggerPockets that you can get for free. But remember that real estate is one of the oldest businesses there is. And the inputs and complexity is really not that high. You know, you're not disrupting anything. And I agree, like the world might change. We might all be using crypto. I don't know. But like there's still going to be real estate. You're still going to be collecting rent, and you're still going to be paying things like your mortgage and repairs and maintenance. Like to me, it's just this old school kind of business that makes it, it's not like the sexiest thing, but that's what sort of makes it, one, reliable and less risky to me than a lot of other asset classes, and two, not that hard to analyze if you like honestly get good at really simple calculations. The calculations you can learn in the book, that's honestly not that hard because a calculator spreadsheet can do that for you. The thing you really need to focus on is your assumptions, right? Because you guys know this, but like you could put some garbage ideas into a calculator and it'll tell you you're going to have a great idea, you know, a great rental property. But I think that the skill of being a real estate investor is really about honing your ability to figure out those assumptions. Like what is rent? What is rent growth? What are realistic vacancies? What are realistic repairs? And that does take a little bit of time. The best recommendation I can give to people is to talk to as many investors in your area, agents, property managers in your area as possible to gut check your ideas. Because this is one area where data is helpful, but it's not a complete story. And you'll learn maybe what a median rent is for your zip code, but not what's going on in your block. And you guys know this, but real estate is hyper local with these kind of things. It can come down to the individual property. It can come down to the unit within an individual property, how much it's going to rent for. And so that's where I recommend people spend their time. And it's not like this takes years. Like you could spend 2 weeks figuring this out and just like learning and getting exposed to enough different properties and realities to gut check your own inputs. That's to me the place to spend your time.
One of the things that I've noticed, I think success in real estate comes down to really this one thing, and it's your ability to endure when things go wrong and not think that you need to have a fire sale or get rid of everything when you have a flood or a storm or whatever it might be. Like Ryan and I have seen the best and the worst of real estate all in 1 year. And I think your ability to be like, oh, this is just a problem that millions of people have dealt with before, and I will get through this on the other side. And I don't need to sell a property I've had for 8 months. I can get through this and I can last. And if you the more you hold and the more the market does the work for you, I think that to me is where like it separates the good from the bad. And it really honestly in business, in life, but mostly in real estate, like if you just hold on, you're generally going to be in a better spot. Even if appreciation is just 3%, you're getting the loan pay down. Totally. You're going to be in such a better spot in the future. And that to me is major.
It's like we'll use the Gen Z terminology here. It's like you need the diamond hands in real estate. Like you do just need to like hold on. And yeah, like I'm not one of those people who says never sell. I sell stuff to buy more real estate, but I don't think I've ever like sold real estate and taken money out of the real estate market. No, I haven't. And I think, I did an analysis about this a couple of years ago because I saw this chart that said that if you leave your money in the stock market for 20 years, your probability of losing money is pretty much zero, statistically zero. And I was like, oh, that's pretty cool. I wonder what it is for real estate. And I figured it out, and it was about 11 years. So it's about half of what of the stock market. So that's better. And that really is the fact that it's 11 years is when you bought at the height in 2006. And so, that's how long it would have taken you to recover your money. So that was about the worst time you could have ever bought real estate in the history of the United States. And still your money would have come back in about 11 years. Even in other corrections in the housing market, usually prices recover in like 12 quarters, so 3 years. So something like that. So honestly, it's just like, it's hard. Like everyone, it is difficult to watch your money or your investment lose value on paper. And it's so important to remember, though, that it is just on paper. You actually haven't lost anything until you sold. And that is very true of every asset class. And real estate is no different. Like, especially, actually, real estate is probably better because real estate is only one portion dependent on your property value. Like you said, you get cash flow, you get amortization, you get these tax benefits. So even when you're quote unquote losing money on paper, you're still actually netting something, unlike crypto, which is entirely dependent on the value of the asset, and you don't get some of those secondary benefits. So it does, I think, to me, it would change my calculus of how long I held on to certain things.
100%. So I think I just view, I guess, my investment portfolio is like this virtual pie chart, right? And then just each sliver of the pie can be in different sectors. And obviously we talked about stocks, you have a little bit of crypto. And then we personally, Corey and I, believe that everyone should have a piece of real estate in their portfolio. Like it's what makes up 90% of millionaires, but also you already mentioned all the benefits that come along with it. So for a well-balanced portfolio, it's including all these things, right? But you become really good at one thing, especially in real estate. So a couple of things that you guys touched on that I just wanted to highlight here for listeners, like real estate is extremely forgiving, right? And it's one of those things where you can mess up, and you still end up on the right side of the coin. But really, it's a people business. We talked about how to analyze deals and like some of the things that you need to uncover. But it comes down to having a pulse or a thumb on your market. And a lot of the things that you mentioned, Dave, is like relying on other people in your network. And we talk about the importance of building your team, right? And having a great agent, having a great lender, and then also other investors around you to vet ideas off of. And so that's what I like really about our community and the BiggerPockets community. Like there's the ability to connect with others that are doing the same thing that you're doing. We found that it's overarchingly a people business, and who can you lean on that's had ample success over time, and just ask, hey, does this pass the sniff test? Would you do this deal? So, and then the last thing I wanted to touch on here is like, we've talked, and you alluded to this earlier, Dave, in the episode, which I really like, is when you become a real estate investor, you become an entrepreneur and you become a small business owner, which is very plainly put, but all the things you learn along the way investing in your first deal are what shape you as an investor, and they help you make decisions for future investments, whether that is something in crypto, whether that is something in the stock market, whether you want to buy a small business. And Corey and I have just completely changed. Like, I don't know how to explain, like we were consumers all the way through, and now having gone through the motions the last 5 years and invested in Airbnb, short-term rentals, long-term rentals, midterms, boutique hotel, we've done it all. And so with that, we're like, whoa, and you don't realize, you're kind of just trying to do the next thing and keep building and stacking. And I say all this to say, it's come back to us. We've completely changed as entrepreneurs, and we are more seasoned than I think we even know. And it's been we've been able to get some more deals and vet out other people and partnerships. It's who we've become in the process, I should say, is like, what's the exciting part versus always the dollar. I think people are always focused on the end result and how much money is going to be in my bank account, but really it's the relationships you build and who you become as an investor throughout the deals.
Totally. Yeah, I completely agree. I think that you learn so much each deal that you do. And it also, for me, time flies, right? Like you're looking at this next deal, and I talk to people right now and they say, hey, I want to get into real estate. I want to retire in 2 or 3 years. I'm like, that's just not going to happen. Like, I'm sorry. It's just not. It's going to take you 10 to 15 years. And like, I'm 15 years into it, and it's been fun. Like I liked it. I wasn't like, oh man, every day, can't wait to quit my job. Like I still work because I want to. And I'm going to keep working because I want to. And I'm going to keep investing because I want to. I like doing it. And it's like, I think that's why real estate attracts this entrepreneur type, right? Because like you guys are learning and enjoying and becoming different people. And that's fun of it. Of course you want to make money. I wouldn't do it if I didn't make money. But like, I think that holistic benefit to entrepreneurship is really nice. And it helps you learn so much. Like, I don't know if I'm going to do this anytime soon, but I don't know if you guys like follow like Cody Sanchez and Alex Hormozy and like people who like talk about small business. Like that intrigues me personally. And I don't know if I'll do it, but I feel like because I've invested in real estate, I feel a level of confidence that I could probably figure it out, because I didn't just like one button invest. I have made connections with people. I have built teams. I have vetted operators. I have had hard conversations with customers. When you learn those things, it's a skill set that applies to a lot of different types of investing. And businesses I may want to be a part of. Maybe I will buy a services company at some point. And just like, I think it's just cool that you learn all these skills and put yourself in such a good financial position.
It opens doors for you, really, is what it does. It opens new doors that you didn't know existed before. 7, 8 years ago, Ryan and I didn't even know that financial freedom was an option. You just are working your job. You don't know what you don't know, and before you know it, you're meeting people where they've been financially free for 20 years. You're like, wow, if this is possible for that person, it could be possible for me. So I think it's awesome, man. As we wind down the show, I want to talk to you a little bit about just your experience with BiggerPockets, like getting involved with them. Like, how did you become the head of real estate investing at BiggerPockets?
Yeah.
So like, how did that come to be?
It's a wild story. I mean, it's just one of these things where you just are in the right place at the right time. But so I told you, I was investing for 5 or 6 years. I had actually, during the course of my early career, started a different tech company that did okay for a while. And then my partner and I decided to walk away from it. It just wasn't growing and it wasn't fun anymore. And so I decided to go back to school for data science. I told you I was a poli-sci major, which was completely useless. And I was like, I'm going to go learn a useful skill. And as I was graduating from that, I was thinking that I really loved real estate. I was just having fun, but I never really thought of it as a career. I wanted to work in tech. And I was like, maybe I can find a tech real estate company. And I Googled it and found BiggerPockets. I'd never heard of it. This was 2015. I'd never heard of the company, but their headquarters was 1 mile from where I was house hacking. I didn't know the term house hacking, but I was just like doing this on my own. And I applied. There were no jobs for me. And I waited. I kept applying. And like 9 months later, there was a job for like sort of an analyst type role, and got interviewed by Josh Dorkin, Brandon Turner, and Scott Trench all at one time. And fortunately got the job. And I've been there almost 9 years to the day now, in all sorts of roles. But I think what I love about my current job is that people don't get this instantly, but I think when I explain it, they understand that BiggerPockets is not a real estate company. It's a software company and a media company. And the most people that we hire are software engineers or marketers or operations people or financial analysts. It's like a normal company. And we need someone to be sort of the voice of our customers and to like sort of be the voice of real estate investors. And honestly, probably half of our employees, maybe more, wind up becoming real estate investors, which is super cool. But my job is sort of to be like, have a pulse on and be sort of the subject matter expert on real estate internally and externally. So I get to study the housing market and talk about it to our customers, but I also talk about it to BiggerPockets, like to our product managers, to our marketers. I'm like, here's what's going on. Here's what people are thinking about. Here's how we need to message these things. So I think it's great because I still get to work in tech, which I've always just like had a passion for. I like product development and that kind of stuff, but I get to focus it all on real estate.
It's really
your
cool.
entrepreneurial spirit of going back and waiting that 9 months and not giving up on it, and now you've been there for 10 years. I just think if that's not a testament to holding out in real estate, but you bought and hold that position, So like,
yeah,
congratulations, man. That's really awesome.
Yeah, it's been cool, and I thought I knew what I was doing in real estate before working at BiggerPockets because I had a couple properties at that point, but it was all just gut. And man, since joining the team, you learn a lot. Becoming part of the community is so cool, and getting to interact and listen to the podcast and be a part of. It's not just the people you see on the podcast or YouTube or whatever. Just going to BiggerPockets conference or meetups and really makes you such a better investor. Like you said, investing is just a communal thing. Real estate investing is a communal thing, and so it's been really, really fun to be a part of. And hope to keep doing it for as long as possible.
I think community in any business actually is what makes the business go. And Ryan and I have a coaching program. We teach people how to buy their first or next rental property. I've found that being around other people who are a couple steps ahead of you, who've seen it, done it, felt it, understand the consequences and the profits and the returns, is just like you feel better sharing your journeys. And I think that's what BiggerPockets, like the originator of that, the community. Yeah. So it's so cool, man. The last question for me. Yeah, absolutely. Last question for me is just like, what are your future goals? Like what, you've been an investor for 15
man.
years. You're at BiggerPockets. You've been there for 10. Like, you've lived in across the pond. You've done a lot. What does the next 5 to 10 look like for you, Dave?
Yeah, it's a great question. So I'm trying to figure it out. It's like this idea that everyone knows what they're going to be doing is a lie. I'm in a very fortunate position. I guess I would call myself financially free. Like, if I wanted to reposition my portfolio to be very cash flow focused, I could live off of that. I'm just not, I'm not done. So like, I don't know if you guys know Chad Carson. He has this like framework where he talks about being in like the growth stage and then you go to the harvesting stage. And so I'm like trying to figure out like how aggressively I want to go from like building and growing and acquiring to like just chilling. Because I'm 37. I want to probably keep doing this for another 15 years at least. Like, I'm having fun. I don't know what I would do without working. And so I plan to keep, I'm trying to actually become a little bit more active. I just moved back to the States. I'm doing a live and flip for the first time. So I'm really trying to learn construction, because that's like my big gap in my investing. Is I've done BRRRRs and like I've done some structural stuff, but I'm not good at it. So that I'm trying to learn that part of the business is like sort of the skill I'm trying to acquire. And then honestly, just buying really good long-term assets. Like, I started buying cheaper stuff or older properties, and that's a great way to get started if you can hustle. Like, those are great things. I'm just at a point in my career where I'm like, I want to buy something that's going to be low maintenance, low capex. I'll put more than 25% down if I need to, because 15, sort of like thinking about like, what am I going to want to own 15 years from now when I really want to stop working? That's kind of what I'm thinking about. Those two things right now. And yeah, I think helping people, the education side is really fun for me. So that's my personal investing, but I really want to help people to sort of readjust their expectations for this new era of investing where we're in, where it's a little bit more expensive, it's a little bit harder, but I still believe in real estate very strongly. And I think it's more a change in expectations than a change in like the fundamental benefit of the industry. And so I am fortunate to be in a position with an audience at BiggerPockets, and I'm hoping to use that position to help people see that real estate's still a great way to pursue financial independence. Still the best way, in my opinion.
Yeah, man. Thanks for shouting out, throwing Chad in there. Chad was he was the first person to take a chance on us on our podcast. Like,
really? Oh, that's awesome.
And
he's the best.
Yeah, literally like 2020 during COVID. And so we owe a lot to him. We read his books. I mean, we've had a number of people from BP on, but he was the first guy to be like, yeah, I'll come on this weird weekly juice. Then we changed it to the wealth. We changed it to the wealth juice. But yeah, it's so.
He's
yeah, man,
great.
that's awesome. That was the last one for me.
He's the best philosophy about investing, I think, because he's just not like, he's like the opposite of the one button investing, which it's like, he's just like, be a good entrepreneur, long-term, low risk. Remember why you're doing this. Don't just grow for the sake of growth. Like, I love all of that. He's taught me quite a lot.
Right. It's all yours if you want to take us home.
Well, Dave, thank you very much for joining us this week. If people enjoyed the show, they want to connect with you, network, potentially read your books, where can they find you?
Everything's on BiggerPockets, so you can find me. I connect, if you want to message me there, that's fine. I'm also on Instagram at the Data Deli. But if you want to check out either of my podcasts, you can find that on the Market or the BiggerPockets Real Estate Podcast on Spotify or Apple or wherever you listen to podcasts.
Awesome. Thanks, Dave. It's a pleasure to get to know you. We've been listening to your voice for a while, so to share the same virtual room with you is pretty cool. So thanks again for coming on today.
Absolutely. Thank you both. It was a lot of fun.